Good morning. It's Tuesday, 11th of July, 2023. My name's Anil. This presentation is for education purposes only and not intended as an investment advice. So everybody knows that. So just make sure you read the disclaimer. Trading is risky. Make sure you know what you're doing and don't risk more capital than you can afford to lose. So very important you read that. Those of you who haven't been to my webinars before, I'm head of trader education, doing this a long time, traded most things, futures, commodities, Forex. Nowadays, I do a lot of trader education and mentoring, helping generally people, fast track their journey into trading. So today, what are we going to do? As every Tuesday and Thursdays, I do market analysis, look for sort of interesting trade areas, and also take requests in terms of if you are interested in me looking at any charts. I'll use the same top-down approach that I use for everything that I trade, regardless of the instrument, regardless of what I'm trading. And I have just found this approach works for me. And I'll talk about my approaches and why. It's important that you have a top-down approach. We're also going to look at some free tools that ZenFinex Plus have, which are really useful, and I'll show you how to access them. And at all times, by the way, you can ask me any questions in the chat, and feel free anytime, to request any clarification that I'm either skipping over or not covering as well as you'd like me to. This is the area where you'll get the free tools. It's, as I keep repeating, a lot of people try to, charge for this, that, and the other. We don't. These tools are absolutely free and very, very useful indeed. And I'll show you how to use some of them. We're going to just look at maybe the economic calendar, the technical views, and the featured ideas, which essentially is helping you understand other traders' perspective on how they're looking at current markets, and see if A, they chime with your own analysis, or B, as a learning exercise for you. And let's go straight to charts. I always like to go straight to charts, and we can start looking at what's going on and some of the things that we looked at last Thursday. If you'll recall, I was putting a little bit of caution in terms of non-farm payroll. We had those numbers out. We'll do some analysis on those numbers, utilizing some of the ZenFinex Plus tools, and see if they, are helpful to you. So we've had this chart continuously running for quite some time, and we've identified consolidation areas, breakout areas, resistance and support levels. I'm going to show you how I create this from a top-down approach, but I'm just going to review some before I take the lines away. I'm just going to run through some of the things that we talked about. So I think let's have a look at the UK indices. Where is it here? So those of you who recall from last week, we'd been following this downward channel, and again I'll show you how I draw these and how they can be a useful guide as A, direction, B, turning points, and just generally try to get a handle rather than just looking at a blank chart with zigzag lines. We want to kind of look for areas where either we're looking for entries or we're looking for targets or stop losses, and all three in many ways utilize the same things. It's just a way of looking at charts. So we've been following this downward channel for a while. It literally hit some resistance, hit the top of our channel, and plunged 200-300 points. So that would have been a really good trade, just utilizing very, very simple techniques that that I've used years and years and years. So I've tried everything. I've tried indicators, moving averages, oscillators. They just don't work for me. So over the years, I've developed my very, very simple top-down approach, and that gives me key areas where I'll be looking for entries and targets. So let's just have a look at I'm going to stay focused on the GBP because if we just look at news for a quick second, and this is the, just so you know what this is, it's that plus Zenfinex site I gave you a few minutes ago, a number of tools. We won't have time to go through all the tools. We'll look at a couple of these tools. But the Economic Insights is really a extremely good calendar. Why do I think it's a good calendar? Because the calendar itself, let's look at today, for example. So we get, the news, whether it's a high impact, medium or low impact, but what we're able to do is do a little bit of deeper analysis in terms of preparation for when the news is scheduled to come out. We can do some advanced work, see what happened when previous news announcements were announced. Let's just have a look at the unemployment rate, which is obviously key for the UK, the FTSE index and the British pound. And then we're going to focus on those a little bit. We'll go on to gold and anything else that you want to look at straight after. But let's just have a look at the unemployment rate. So the forecast was a very slight increase from the previous, and in fact, it went slightly higher. So unemployment is getting higher than expected. So what did that do previously to, for example, the British pound USD? So we can see here on June the 13th, a month ago, there was a previous, a 3.9. The forecast was forecasted to be the same. And actually, inflation dropped lower than expected and lower than previous, which, depending on how you look at it, and obviously the main topic at the moment for everybody is inflation. Prices are going up, and how different central banks are using inflation, or how to combat inflation by utilizing interest rates and other sort of tools to help them dampen down inflation, because the objective of most Western countries is to keep inflation at a low level, unemployment at a low level, and growth at a sustainable level. These are the sort of key markers that central banks look at. Obviously, we've seen in the last year and a half, things go out of whack. Inflation has been increasing for many reasons, not just things that are happening in Ukraine with oil prices, but also the general quantitative easing that we've had for quite some time. That debt, when interest rates were low, was manageable with growth rates, right, with GDP. But as those have, as interest rates and inflation have increased, that borrowing is obviously going to be more and more expensive for not only governments, but also households. So these are things that we're looking at from a fundamental perspective, and how that is affecting, for example, the the UK, stock index and the British pound. And we can see here from June, when inflation went slightly lower than expected for 4 hours after the news had been announced, markets shot up. They saw that as a positive for the British pound, and markets went up. Now, if we look at what happened this morning, for example, and that was only an hour ago. So let's just have a look what happened an hour ago. So what I'm trying to do is I'm trying to do a like for like what happened a month ago when the same unemployment news was announced, and really establish what happened 1 hour after that news announcement when the actual was less than forecast, right? So we got a benchmark, prices went up. Now, if we now go to the live charts, let's get that chart up of the British pound. And we go to the hourly chart, and we can see here, look, clearly markets have been dropping, and they dropped right off the top of that channel. And in reality, they've come, if I extend this channel a little bit, I'll do that from a higher time frame. But if I extend that channel, look, it hit the top of the channel to the bottom of the channel. And whilst everything looked like it was going up, overall, longer term perspective, we had a downward channel. Have I got any questions here? Not yet at the moment, that's fine. So what we're looking at, what is happening right now, right? So what is happening right now, the news of higher unemployment has just been announced, marginally, just but higher than expected, right? So let's start using the two things together, and I'm talking really just from a UK perspective, because if we look at the UK FTSE index, the 100 index, and let's say compare it with the NASDAQ, a completely different picture. So we can see that indexes don't necessarily follow each other. In fact, there's an inverse relation because the FTSE went down and the NASDAQ went up. So sometimes people try to trade correlation between the UK and US indices, and sometimes it is correlated, but right now we're seeing a divergence. We're seeing, from a week, let me go to a daily perspective, it might be a bit easier to see. Right, so we're seeing this same sort of consolidation from a daily perspective. It's had a big run up, and if we go back to the UK as a way of comparison, it's had a sort of downward channel. So there's it's going the other way basically in real terms. But what we can highlight from this particular chart is that if I draw a horizontal from the daily, like the reason why I'm drawing it here, because look, prices used that as support, shot up to the top level of resistance, came back exactly, or I say exactly, almost, depending on your perspective, couldn't sustain a level below this, bounced back up, but couldn't get higher than the previous resistance level. And then it's slowly been, going up and down, back down exactly to this level that we saw in November 22. The point I'm really trying to make is that if you use a top-down approach, for example, if I was looking at the 5-minute charts, I wouldn't know where I was, or even the 15-minute charts. It's very difficult to know, is it an uptrend, downtrend, or whatever. So it's fine to trade the shorter term perspective, but always have the higher time frame picture in mind, because they will often have levels which you need to be cautious of, or which you can actually utilize, for things like targets, for things like stops and entry points. So rather than just me rattle on about these, I'll just focus on gold for a minute, and I'll do the top down on gold, because I know gold is a very popular instrument. Before I do that, let's just finish off what I was talking about with the UK index. Let's find that again here, and I'll go back to like a 4-hour perspective. So it's hit this previous level here. What has it done to the pound? So we've been tracking the pound for quite some time as part of our regular sort of analysis. And we had drawn this in for some time. We were looking to see if we could get a break out of this consolidation back into some support levels, which it did do. We put some theses forward that if there was strength, they would come back to this level here. And, we did this back 2-3 weeks ago, or whatever it may be. I can't even remember. And it broke down, came down to exactly what I'd drawn here as the potential level. It wasn't just a guess. I used levels to determine where there could be turning points. Remember, turning points is something that I think I've got a course on turning points coming up on the portal, the free Zenflex portal. So do have a look at that, because that's where I talk about ways to identify turning points, right? Turning points are key. Often you'll hear the phrase, don't try to time the tops and bottoms of markets. Well, fine, I try to. Do I get it right every single time? No, but I want to know where the turning points are with a high probability, because when looking for trading setups, I want to also utilize these turning points as areas where I could put stops or targets. So just become good, or focus your energy on looking at turning points. And as I said, I've done a course, video course, on how I look for turning points. So I don't know when that's going to go up onto our portal, but it's looking at that. So let's, without too much more talking, let's do a top-down approach on gold. So again, this always makes people wince when I remove all the lines, but you know, they'll come back because market structure is market structure. We've had a breakout of this range here. Now, what I'd be looking to do is look for a pullback into this area. I'll come on to the trade setups in a minute in terms of what I'll be looking at. But everything is very structured, everything's clear, everything's methodical. I don't need to say to myself, wow, you know, gold is just, the British pound has just shot up, I should just buy. Obviously, not a great thing to do. What we'd do is we'd look, and I will do a top down on this one as well, but we can see an upward channel you know, developing. We can see a level of support, resistance break, and you know, we're looking for the retest, mindful of the fact that it may come to the bottom of the channel. What do I mean by that? I'll come back to the top down in a second. I've just seen something I want to highlight to you, and that you can, right? So we can see an upward channel that's not as clear as I'd like it to be. Just 1 second. So off this level here, off this breakout from this consolidation here, came down, hit a daily level of support, bounced off it, and now channeling up, hit the top of that level here. So we're looking, or I'd be looking at an area around here for a possible buy opportunity. Why? Because it's the bottom of the channel, right? And it's broken this level of resistance, 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 came down, finally broke through it. And, you know, often it will come down. It might take a day, it might take a couple of days, but it will come back and revisit this area here. And that would be a good area where I'd be looking to, you know, people often say, well, look, it's all buy, buy, buy. Well, it's run away, it's gone. If you chase that, you put a buy order here, it's likely to come down, stop you out, and then you think, and then bounce into your direction, which is always frustrating. So as promised, let's have a look at gold. And by the way, any questions, you know, don't hesitate. If I'm going too fast or not explaining myself clearly, please do let me know. So let's start from a weekly perspective. Let's get rid of all the lines and start our top-down approach all over again. We get rid of everything. And we start marking up key levels, right? So we've been drawing these same key levels for some time, right? So we know up here, why haven't I taken it to the tip? Why haven't I taken the body? Sometimes people ask me, you know, where do I put my level of resistance? Well, I like to put it where I feel that, like, for example, let's just investigate this from a weekly perspective. It has hit this level precisely, right, at 45, came down, broke through it, didn't close above it. The next week went exactly to that same level here at 45, 46, and has retreated. So although it looks random that I've just put the line there, you know, why didn't I, a question I sometimes get asked, why didn't I put it here? Why didn't I put it there? I put it there for a precise reason. Markets do not like this price above here. It hasn't closed above here. You know, and you could argue, well, it hasn't closed above here either, but markets went there. If they went there before, they're likely to go there again. So that's why this line is here. So the other area that I want to look at is the turning point here. So markets came down. And remember, this from a weekly perspective, we're just putting our weeklies in the moment, and we're starting to frame gold, right? So we then go to daily, and if we then zoom out a little bit, we can now see the low and the high, the resistance and the support. We've seen prices come down in a channel, right? So I'm doing exactly what I do normally, and I'll put the daily channel in. That might get adjusted in a minute when I go down to the 4 hourly. But broadly speaking, right, it's in a downward, right? It came down as low as this weekly level. It hit it twice, if you can see here. So this is a level which is quite important between 86 and 91, right? So that's why I'm watching this, and why actually prices didn't like this area. It didn't like it previously. Let me just highlight these for you. It didn't like this. Oops, sorry, I've just moved that accidentally. Let's put the box in. Right, and it didn't like here. And you might say to yourself, well, why is this so significant? What relevance has, March 2023 got to where we are? Well, the relevance is, let me just draw this in, is that an understanding of why markets turn. Look, and I'll just put the turning points here, just to illustrate the point I'm really trying to make here. Look, it turned here. And whilst it popped through this level here, it's still, in my opinion, turned here. So we've got our two, four turning points from a weekly, from a daily perspective, based upon weekly support and resistance. I hope that all makes sense to you, right? So now we're starting to frame from a daily perspective gold, bounce off here, and we can see here that it's just been going sideways for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, maybe 15 trading days, right? So this is the consolidation that we saw around here, right? I know it's a big consolidation. It's still trading opportunities within this, but look, again, turning point, turning point. Let me just put these here for you. Turning point, turning point, turning point, turning point, turning point, turning point. So this is why this area is important. Not only has the breakout come to a weekly level of support, it's trying to find its way back into this important area. It's not just going there for fun, right? There is a reason. There's a reason why this price for gold over a protracted period, from 16th of May till, sort of around, end of June type of area, it stayed pretty well much in this range here, right? Still lots of trading opportunities in there, because if we go down to the smaller time frames, we'll see those opportunities in there. But essentially, if I do go now, before I do that, let me just point out this other factor, is that when it did break out, right, it came back and hit the bottom of this level here. Remember what we talked about earlier. We talked about when you have a level of support or resistance, often when price moves away, it'll come back, retest it. And what we have to do, and it's not quite clear at the moment, because we're now forming another level of consolidation. We need breakouts of this, right? So let's just go to a 4-hourly perspective. And, hopefully you can see what I'm doing. I'm not using any moving averages indicators. I'm just using my eyes to establish consolidation areas, turning points. Look, we can see here, it doesn't take an absolute genius, right, to figure out that 1930, right, is a key level. I even mentioned 1930 a few weeks ago when I talked about the breakout, retest, back to the weekly support. And now we're trying to find, well, it's trying to find a way to get to higher prices, right? But every time it tries, it's rejected. Every time it's rejected, it's rejected. And the thing I'm really trying to re-emphasize, that I emphasize on all my webinars, is the importance of these levels, right? Because they're not just there, it's just not a line at 1930, right? There's a reason why prices are turning. And let's count them, from a 4-hourly perspective. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 times, right? It couldn't get past this. 10 times between June the 26th to today. It's exactly at that level now. So we have to ask ourselves, and I can see clearly anyway, that what gold wants to do is to go up, right? Now, if we now, and by the way, these aren't trade recommendations, right? I'm giving you my analysis on what I see in front of me. And I've suggested it, right? It's been consolidating, broke out the consolidation, retested, came back, created a level which we can go back all some way to reference this. So it's not just 1 point here, it's 2 points here of level of support. And it's tried to find prices to go high, but every time it comes to this 1930, it pulls back down, goes to it, pulls back down. But what is important here, and what is leading me to have the opinion that there looks like there's some strength, is in fact that every time it comes down less and less. So let's mark these areas up. And what I'm doing here, by the way, I do on any, whether it's the FTSE, whether it's the British pound, we're using gold, it doesn't matter. And if you can master this, and maybe I shouldn't be saying simple, it's simple after you've practiced it and done it for a while. But what I consider to be something that's doesn't require crossovers, moving averages, doesn't require any of that, right? It just requires your eyes. So what we can see here, every time prices come up, it comes down. But every time it's hit it, it hasn't come further down to the lowest point here, right? And again, the course that I've just created a few weeks ago on market structure, I don't know if I can access it here. I don't think I can, but do ask the Zenfinex portal chat box, when is the Anil Kumar market structure coming out? Because it's doing exactly what I'm explaining there, that's been happening years and years and years. This happens the same over and over again. It's just ridiculous. It's just same thing over and over again. So look, try to push through one more time, hit the top of that channel, albeit we drew that channel just a few minutes ago. But the main turning point is this level of resistance. Prices do not want to sustain themselves above currently at 1930. Now, what this usually means is that there is a potential explosive move, because whenever you get this kind of pattern where, and I don't think I can draw it, if I do draw it, it'd be really bad, so I won't draw it on here, is this sort of wedge pattern, right? And the closer, and if it comes down now and doesn't break this level here, there's a good chance, right? After, and by the way, don't take trades based on my analysis. It's just purely for education. Research it, have a look yourself. But this, even though we're in a downward channel, we can see a bottom forming, right? Even when prices came down, it quickly rejected it, and we're trapped in this level here. How would I play this? Really, really simple, right? I'd wait for this high level to either close or come back down and retest this, and I'd be targeting, let me draw these up and see if it does indeed do that. Let's see if I can put, I'd be looking at a target around here. I'd be looking at this area here for my buy entries, and I'll go right down to smaller time frames, right? So if we go to this here, so this clearly now is an area where I want to be buying off. If, for example, it breaks this low here, it would come and retest this level here, and we're still stuck in this consolidation. We're at the top of the consolidation, right? And we're looking for a breakout to get back up to this level here. Nothing at the moment tells me that that's going to happen, because it's struggling, right? it tried to push up from an hourly perspective, and as soon as it sort of got to sort of 136, it came back down. But interestingly, it's higher than it's been previously. What do I mean by that? So these turning points, one turning point, two turning points. So it's got higher every single time, right? So the fact that it rejected it, come back down to this level of support, means I'm getting ready for a potential trade. And that potential trade, if it goes on the long side, has a nice move up. Yeah, there is a little bit of congestion around this area here. So this is where trade management comes into play. What I mean by trade management is that, if you do get a long, there's a fair amount of consolidation in here. So we'd be looking at putting, half our position to bank some profit and maybe go to break even, and then head here and use trade management to try to get as high as possible, because it looks like this wants to go up. Are there any questions on gold before I move on to some other stuff? I tried to make these between 30 to 40 minutes. I will go through some of the plus tools in a second, but I just want to make sure if there's any questions, please ask. And if there isn't, let's go back to the news tool here. And what we're looking to do is see, look, what is happening for the rest of the week? So it's Tuesday, and I want to kind of see, is there anything high impact news coming up? Let's see if I can include this week. So we got today, and we looked at it, not much in terms of, we had some British, we just covered the UK. Got a quick question here. Yeah, I agree. We've had a question here saying regarding the gold. Let's just have a quick look at gold one more time, just to finish that off. There is a question. Yeah, so what it's doing, right, is clearly those who were short, who took the breakout down, right, or took the retest down, they're hoping for it to continue going down, right? Their thesis is that gold is coming down. And those, and particularly the ones that have been hanging around for quite some time, they would have put their stops, let's say, retest, started going their direction, go to break even. If I magnify this a little bit here, right? So if you were able to get the retest, I would say, don't take the breakout, take the retest here. Those are, and particularly, longer term traders, they'll be short on this, and maybe they would have put their stops either at this level here. I won't draw too many boxes here. So they've been stopped out. So the shorts who maybe put their protective stop losses, they've been taken out. So if this liquidity is taken out, right, what it's doing is a possible continuation of a downward move, right? Because what institutional players really want to do, they want to take price to where liquidity is. There would have been a lot of liquidity around these levels here, right? Because that's where obviously people are putting their stops, and even the breakouts, the people that are thinking, okay, like myself, it's going to break to the upside. I don't put just pending orders. I wait for confirmation on lower time frames to see if I can get a bounce upwards. If that price action doesn't present itself in that way, then I'll just turn my perspective and say, okay, this was a liquidity grab before a stronger move down. The fact that inflation appears to be coming down in certain regions, and that could have an impact on the gold price as well, because when there's high interest rates, gold as a return from deposits and safer investments, investors will look at that. But from a risk perspective, if the risk is still there that higher inflation is going to do more damage, or the central bank is going to do more damage to the economy, then that will have a positive effect on gold. These are sort of mixing and matching fundamental and technical analysis. I don't know if that answers your question. So this is a very key area. What it does out of this area will probably be its next move, because this whole area back from May was accumulating buys and sells, and whether they're long or short, they've either been stopped out on this side thinking that the price is going to go up, they've been stopped out. The shorts gone back into this level have also been stopped out. So now it's a question of what is the real intention, what is the real direction that the market's looking for, and that's what we need to wait and be a bit patient about in terms of direction. And that's why I was really looking at news to see if it can help us from a fundamental perspective, right? So today we just looked at unemployment going up slightly in the UK. Let's see what's happening for the rest of the week. On the 12th, tomorrow, you've got PPI in Japan, which will affect the JPY. Australian dollar, I don't think that'll move much on. Depends on whether it's positive or negative in terms of its approach. We'll see what happens tomorrow. Inflation is obviously going to be important, right, for the US dollar and most everything else. So that's on 12th, which is Wednesday. So they're predicting, or they're forecasting, that inflation will be coming down. So we just talked about that in terms of, is there anything from a fundamental perspective that can help us with our idea on gold? And inflation is clearly going to be a key factor. So if we just go to the impact of the last bit of inflation rate news, remember it came down, it was expected to come down, but it came down faster. And the euro dollar went up. Let's look at it from a 4-hourly perspective. It kind of stayed exactly, it had a bit of volatility 4 hours after that June 13th news announcement. And really, if we watch what's happened as a result of that, I'll just keep the euro dollar in mind from June the 13th, where inflation was lower than expected. Just remember that for a second. So this is how you can utilize these tools in conjunction with technicals. If you use technicals by themselves, sometimes you miss a little bit of additional information you might be able to get. So let's look at euro dollar. Remember, inflation in the US was weaker. So where is the euro dollar here? From June. Let's magnify that a little bit. So from June, right, it's again hit this level of support, bounced off it. It's right at the high. Just double check that this isn't a candle hidden there. So we see this level here, came back down back in June. Prices came off and then came off the double bottom and proceeded to go up, and heading towards this level of resistance. So that's from a daily perspective. So we can see here from June, and remember the euro means when the euro goes up, dollar comes down. So the weakening of dollar, strengthening of the euro dollar has actually affected this move upwards. It's right at this last turning point here. And again, very crucial because whilst there's levels of We need to see what happens around it, because every time it's gone into this area, it's rejected it every single time. 1, 2, 3, 4, 5, 6, 7 days of trying to penetrate this level, and from a higher time frame, came back down, found a level of support, and it's been sort of broke our downward. If I go to 4 hourly, we'll see this downward channel. I think we were tracking this before. It came, bounced off this level here, had some great, I mean, there's trading opportunities everywhere. Once you utilize this kind of approach, you can throw away, and I'm not knocking anybody's different strategy with using oscillator moving average, but you can see here in real time all the potential trading opportunities are here, and that's why I think, if you master this, then you'll be able to spot these two. And all I'm really doing is using support, resistance, channels. That's it, nothing else. And from that, I can gain a perspective on whether the market's going up or down. I can look for key levels, key turning points, and base my trade decisions based on that. Right, I'm running out of time a little bit. But if there's any more questions, I will just go back to the calendar for a second, because I didn't finish looking at the rest of the week. So we can see inflation clearly is going to be important tomorrow. Is it coming down as forecast? They're forecasting 3.2, nice drop from 4. If it continues down, that's obviously going to be good for the US economy, because inflation is not good for any economy. Let's have a look. Or high inflation is not good, I should say. Let's look at Thursday. See what's happening on Thursday. The 13th, we got some GDP numbers out. Again, with the unemployment figure, going up, obviously, GDP is going to be affected. Industrial production is going to be affected. So all these numbers, that's why I use this quite a bit, because it's not just about looking for levels. It's also seeing how the economy is kind of basing or looking for numbers, and based upon the actual numbers that come out, it can kind of give you a bit of a perspective on, is it going to come back to this level of support or resistance? Is it going to do X, Y, Z? So that's Thursday. Let's have a look at Friday. Let's get rid of I'm just going to look at the 14th. And 14th, not much going on, right? So the main driving factor for this week is really going to be, make sure I've got correct. It's going to be tomorrow. Inflation. Need to watch out what's going to happen. Thursday, when I'm back, we'll look at the impact of inflation on things like the euro dollar, the British pound, and gold. And we can do a recap and see how those levels that we were talking about, those levels of support and resistance we're talking about, were either hit, or if our direction ideas were going in the right way. I'll give another minute or two to see if there's any more questions. And while you're writing your questions, do remember to just bear with me a second. Here's the access to the plus tool, the calendar I just used. Have a look at it. And if it looks like there's no more questions, I hope you had a good day trading, and keep an eye out for inflation tomorrow. Thank you.